And in the UK, British supermarket chain Sainsbury's saw sales fall 1.2% in the first quarter amid weak general merchandise and clothing demand. Also, British industrial and electronics distributor Electro Components saw its stock fall 3.9% in early deals after reporting like-for-like revenue growth of 4% in the first quarter, but warning that gross margin will take a hit for the first half due to broadening of its electronic inventories. Also, data in today shows UK services sector stagnated in June. Well, my colleague in London, Juliana, has more to tell us. Hello, Juliana. Good afternoon. A beautiful day to you.
Good afternoon, Chimmy. Nice to see you this afternoon.
Right. So what are the highlights of the latest UK services sector report for June?
Well, I'm afraid it's more of the same. The UK service sector has suffered one of the worst performances of the past decade. The services PMI dropped to 50.2, only just above that 50 level, indicating no change whatsoever from the previous month. Now, economists had expected it to come in at around 51, the same reading as it was in May, but that wasn't to be the case. This week, we've seen poor PMI surveys from both the manufacturing and construction industries. And when you add that to today's findings, it becomes quite clear that the UK economy has slipped into contraction for the first time since July 2016 and has suffered the second steepest fall in output since the global financial crisis of April 2009. So it's a very big story over here. How has this affected the markets? Not massively. There still appears to be some enthusiasm for London's blue chip stocks. The all share is up 0.77%. The FTSE 100 is up by 0.81%, and the FTSE 250 is up by 0.66%. Now, in currencies, the sterling slightly lower after those poor PMI figures. The British pound is down 0.17% on the US dollar. A pound will get you $1.25 today. Down on the euro, a pound will get you €1.11, and down on the Japanese yen by 0.40%.
And in corporate news, Tesco's latest numbers looks like the retailer is facing quite some headache. No thanks to messy Brexit.
Well, no release of earnings from Tesco today. However, yesterday their CEO gave an exclusive interview to the BBC, basically complaining that the new Brexit deadline of October the 31st leaves the supermarket with less capacity to stockpile longer life items. Now, this is an issue that all four of the big supermarkets here in the UK are likely to face. Mr. Lewis said the supermarket chain had bought extra stock of long life items in preparation for that 29th of March deadline, which of course we didn't achieve, but he said it would be harder to make similar preparations for this time round in a case of a no deal. He wasn't too negative about Brexit, I must say. He said that the UK currently imports about half of the food it eats, and that Brexit could be a good time to take stock and create a food strategy that involves the entire country.
London Resort and Paramount Pictures have signed a deal to build a theme park like Disneyland in Kent. How soon will this Fantasyland be ready? And how soon would you be heading there to catch some fun, Juliana?
Well, Chimmy, it's been called the UK's answer to Disneyland, and if it turns out to be anything like the plans and proposals, I certainly will be heading down there with my girls. Now, purchasing tickets, I must add, is still a long way off. Discussions began 7 years ago, and the theme park is not expected to be open until at least 2024, which is 5 years from now. Now, just over 2 years after pulling out of a deal to be the brand lead for the multi-billion-pound theme park development, Paramount Pictures has re-engaged with the project, this time going into partnership with London Resort Company Holdings. Now, this is very positive news, as of course Paramount will unlock the potential for the addition of iconic franchises such as The Godfather, The Italian Job, and Mission Impossible. Of course, a theme park has to have themes, especially considering the size. Now, the London Resort is set to be over an area of 535 acres. That's the equivalent of 100 136 Wembley stadiums. I can't even imagine how big that is. But that's 3 times bigger than any other park that already exists in the UK. So I must say this is a positive post-Brexit investment. We don't really have a lot of those stories, do we, Jimmy?
Oh, perhaps I'll pay you a visit when the park is ready. I'm sure you're ready to host me. Hmm? Thank you for your time anyway.
I'll definitely be hosting you, Jimmy. Thank you very much.
I'll look forward to that. Thank you. All right, in Asia, markets declined today as global trade concerns weighed on investor sentiment. The Nikkei 225 slipped 0.53% to close at 21,638.16, while the Topix fell 0.65% to end its trading day at 1,579.54. In mainland, the Shanghai Composite was lower by 0.94% to close at 3,015.26, and the Shenzhen Composite fell 1.18%. Meanwhile, South Korea's Kospi declined 1.23%. Over in Australia, the ASX 200 bucked the overall trend in the region as it ended its trading day 0.49% higher. Hong Kong's Hang Seng Index slipped more than 0.2%. In the U.S., stock index futures were slightly higher as investors await a fresh batch of economic data amid concerns about global economic growth. At around 4 a.m. Eastern Time, Dow futures rose 19 points, indicating a positive open of more than 37 points. Futures on the S&P and Nasdaq were both seen slightly higher. A sharp rally in global stocks following a trade truce between the world's two largest economies appeared to be losing momentum. Global growth worries also deepened on Wednesday after South Korea became the latest trade-reliant economy to slash its economic growth and export targets a day after weaker factory readings worldwide. On data, ADP payrolls data for June and international trade for May will both be released at around 8:30 a.m. Eastern Time. The Institute for Supply Management's non-manufacturing index and services PMI for June and, of course, factory orders for May will follow slightly later in the session. We'll take a break, and when we come back, South Africa's private sector activity remains in contraction, plus Nigerian equities market update. Stay with us.